I'm Jeannie Pyle-Scott, a director at Centennial Tax and Accounting, and this is my 2 cents on the recent Iowa tax reform. Another facet of the Iowa tax reform is geared toward our retired farmers. When developing the retirement income exclusion, the state wanted to acknowledge that farmers may not have the same traditional revenue sources for retirement that others have. Because of this, there are 2 choices for retired farmers to consider. The first is the annual lease income exclusion. Under this exclusion, a retired farmer can elect to exclude his annual lease payments for the rental of farm ground from income. To be deemed a retired farmer, an individual must have materially participated in the farming business for at least 10 years, must be age 55 or older, can no longer be materially participating in a farming business, and must be party to a farm tenancy agreement. If all of these conditions are met, a retired farmer's lease income is no longer subject to tax. This does not apply, however, to rental income passing through from another entity, such as a partnership. It must be income the farmer was earning as an individual to be eligible. The second option for retired farmers is the capital gain exclusion. This allows an individual who is 55 years of age or older and who has materially participated in a farming business for at least 10 years to sell his or her farm property to a relative and exclude the capital gain for doing so. Eligible property can consist of real estate, cattle or horses, or other breeding livestock. This is a once-in-a-lifetime exclusion, so if all property is not sold simultaneously, the exclusion is only available for one such sale. It is important to note that retired farmers are eligible for only one of these 2 choices. That is, they can either exclude the annual lease payments for the balance of their lifetime, or they can exclude a single capital gain from the sale of farm property. They cannot do both. If you are a retired farmer, I recommend that you discuss with your CPA your intentions with regard to disposing of the farm property so that you can make the best decision for your individual circumstances. There are a few other aspects to the Iowa tax reform, but these are the ones that are most likely to apply to the majority of taxpayers within the state. Consult with your CPA to learn more about these changes and how they affect you. I'm Jeannie Pyle-Scott, and that was my 2 cents about the recent Iowa tax law changes. Thank you.